please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
That's a strong statement coming in from the PMEAc member Surjit Bhalla. Speaking to Sapna Das, he also said that MPC must recognize that rates in India are very high. Here is a slice of that conversation on the appointments of the 15th Finance Commission and the RBI's rate trajectory.
The earlier Finance Commission was already in place when this government came into being in 2014. Look, the kind of reforms we've had, and the two most important are demonetization, GST, completely changes the structure of the economy, the taxation of the economy, and the fairness of taxation of the economy than what we had before. So this is no complaint about all the earlier Finance Commission. It's just that the world has changed and we have changed. And it seems that it's only logical that the new Finance Commission should incorporate this new reality. After all, the Finance Commission was set up in the Constitution in 1950. The world has changed. And, as you know, I keep arguing that we need to recognize, and that's what my book is about, that the world has changed. We cannot operate by the principles we always operate.
So also now, as member of the Prime Minister's Economic Advisory Council, and now with the budget around the corner, how are you looking at the position, not just in terms of RBI inflation? If I may just expand the question slightly, in terms of what may be required in the coming budget?
I can't speak on what is required, but I'm happy to speak on the RBI and the inflation target. The inflation over the last year in India at 2.7% this fiscal year, and if you take the last 12 months at 3.1%, is one of the lowest we've ever had. There were 2 or 3 years in the late 90s and early 2000s when we had this inflation rate. In the book and in the discussion earlier, I talked about, the world is becoming a lot more competitive. I gave the example of Bangladesh and Vietnam. And I do think that the RBI's policy, the MPC's policy, is very, very against the competition and competitive nature of the Indian economy. I think it's destroying competitiveness in India by having these high rates. So I do hope that they look at the numbers as all of us are looking at and come to the right conclusion, which is that interest rates in India are way too high by any sense of the term, including RBI's own definition. Remember, last October, Michael Patra, MPC member, had said that 1.25% was a real rate target that the RBI had, that the MPC had, October 2016. And the real rate has averaged above 3% for the last 12 months that the MPC has been in control.